What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is September 23rd of 2022. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, I want to spend some time to talk about what I think is one of the few Bitcoin charts that no one is watching at the moment, that can start to tell us a lot about where price might be heading in the future, and I think provides a pretty neutral take as to why we can assume that Bitcoin is going to be moving to $14,000, but also might make the case here that Bitcoin may not be moving much lower than that. Now, you all know I'm generally of the idea here, as we've been talking about on the channel, that we are going to see Bitcoin not only retest 14K, but on top of that, that we could have a very good chance of moving lower. But today I want to actually try to play a little bit more in the middle and maybe even give a case for the bulls, that the sell-off or correction that we're calling for this bear market overall may not be as bloody as we're expecting. Just to kind of mix things up here, share some different perspectives. If you guys happen to like it, drop a like. Let's go ahead and kick things off. I'll try to keep it short, sweet, and to the point. So first off, let's just go ahead and take a look here at the Bitcoin chart. Obviously, as we've talked about, chart doesn't look good. Lower highs, lower lows, continuous downtrend since back here in November 2021, coming back pretty much a full year here of a bear market here in the next preceding month and a half. And on top of that, kind of oscillators like the RSI are again just showcasing here just barely failed attempts at being able to recover here. Now, one of the biggest things that I've talked about that has just kind of proven why I have such a disdain for Bitcoin and crypto right now in the sense of sentiment for investing. You all know that obviously the charts didn't look good in general, but what I always talked about is how back over the past few months when we were having the relief rally in equity markets, we didn't see crypto markets, I think, fully show up to the plate. And what I mean by that is whereas, for example, during a correction, we would expect maybe stocks maybe to move down, say 10%, we would expect crypto to move down 20%. We didn't see that on the opposite end. When stocks rebounded about 10%, crypto maybe did about the same, maybe slightly more, but really not 20% to the upside. Just kind of as a mental model here, right? We should expect that there should be more exacerbated moves in crypto markets. And the relief rally that we had here, although we did take advantage of it, it helped us recoup a lot of our losses on altcoins or get us back in green territory on some of our positions. And the key factor here was that we essentially didn't see enough strength in the market. And while that is true here, that we have not seen a resilient bounce, and I don't think we're going to see that for a long period of time, I wanted to share one really interesting chart that might showcase not only why we can expect Bitcoin to have at a minimum, one more final correction down here to $14,000, but on top of that, could be a sign that the worst, really the worst part of this correction and bear market could be soon behind us. And that's why I want to pull up a chart we haven't looked at in a long period of time. And that is a custom ratio between Bitcoin and the NASDAQ. Now, for those of you who may not know, if you don't watch the channel frequently, the NASDAQ is one of the big three indices that measures the stock market. There are other ones out there like the Russell 2000, the Dow Jones, S&P 500, but the NASDAQ is one of the really big ones here. And it's been one of the market leaders essentially because of the fact that it's made up of mainly technology companies, highly innovative, high risk on companies that do very well, or at least have been doing very well over the last decade or so. They've been really the market leaders essentially. Now, what I think is really interesting here, and we don't have to just take a look here at the NASDAQ, that might be a little bit too siloed. We can also take a look here at Bitcoin divided by the S&P 500. If you guys want to do this yourselves, so you guys can track it, you can utilize the tool I use here on the channel. It's called tradingview.com. And you just simply go into the symbol search here in the top left and type in, basically I think one of the best ways you can do this, I'm using the Binance pair here. We could do the Bitcoin all-time history. So we'll go ahead, type that in, go ahead and just click the down arrow on our keyboard so it pulls in the symbol that we want, which should be this one here. It's a trading view index. And we just simply divide it by, say, the NASDAQ, right? Or IXIC, that's the symbol for it. Now, we can start to get a really interesting set of history here, and it's going to generally, if we zoom out, it's going to look like the Bitcoin chart because Bitcoin just made that much multiples over the past few cycles. But it has become growingly relevant to watch this ratio and see how Bitcoin is correlating or inversely trading against traditional markets. And even though, again, the pattern is still relatively within Bitcoin's price, we can start to see some really interesting trends here. Again, even though we sold off dramatically back here in June, we didn't get the kind of optimism that I think a lot of people were hoping for out of the rebound, of the relief rally. It was a really small bump up, and we've basically kept in line with equities, either ascension or decline, over the past couple of months, as we can see indicated by the ratio. Now, kind of putting the number aside here, I wouldn't say to get fixated on this, because we're not really trying to divide Bitcoin by the Nasdaq Composite. What we're essentially trying to do is see whether or not the chart is going up over the long term or down. If it's going up, this means that Bitcoin is outpacing the Nasdaq. If vice versa, it's going down, that means that the Nasdaq essentially is outperforming Bitcoin. Now, it is important to understand that both can be going down, right? And this ratio could be declining. What it simply means, though, is that you would have been better off being exposed to the Nasdaq, or vice versa. If we were moving up, you'd be better exposed being in Bitcoin, right? It's a ratio. It's trying to measure performance here. Now, what I think is really interesting about this is two key things versus just analyzing the traditional Bitcoin chart. First off, the important thing that I think is really interesting is that at this range here, the 2019 mid-range highs here in June of 2019, and also this range from back in February of 2018 could be potentially proving as a range of support here. Now, some of you might be wondering, if you're saying, okay, Nick, you're saying we're going to go to 14K though. How could it hold at this range potentially, right? If you're trying to give the bullish case here, how can you still be expecting Bitcoin's going to go to 14K if the ratio would be neutral? Well, this would essentially call for a equalized correction in Bitcoin in par with the Nasdaq. Our general target is that at a minimum here, right, just from where we're at right now, we should at a minimum expect that the technology indices, like the Nasdaq, are going to be probably correcting 50%. We are well overdue for a proper recessionary bear market, a depressionary bear market, where instead of the kind of 15 to 30% dips that we've gotten many times over the last decade that soon after recover very swiftly, we should be expecting a harsh correction that is going to take us down 40, 50, 60%. I don't want to call the exact date nor the exact value that we're going to go to because no one really knows that. But I want to give ourselves a goalpost here that potentially over the coming months, going into Q1 of 2023, we could see the Nasdaq come down another 28%. That would essentially take us from the all-time highs down a clean 50 to 50.5%. So roughly from here, we should expect that we've got a little under 30% decline left in the Nasdaq at a minimum here if we're looking at the more optimistic scenario. And if we go back to our chart here, right, if we think about the fact that, okay, Bitcoin would be holding neutral to the Nasdaq, we take it here to our Bitcoin chart and look at an equalized amount of decline in Bitcoin's price from where we're at now, that would take us roughly right down towards around $13,600 to $14,000, right? And if we take a look at the price chart here, that would take us down roughly to this previous range here we were just talking about on the ratio, right? Around the previous June 2019 highs, and also here around some of the contestment range in the start of the bear market back in 2018. That could be a very realistic range for Bitcoin to find some support, especially if the macro environment starts to clean up sooner rather than later, and if inflation starts to cool down, if the Fed really starts moving aggressively on inflation. I want to be open to this as much as the next guy, not only because I love crypto, but on top of that, at the end of the day, if the Fed really does start taking, control on inflation, they start getting in the driver's seat of reducing the money supply, increasing interest rates, taming inflation, this could very well happen, right? Now, again, I'm not leaning in the camp that this is the most likely scenario. I think that at a minimum, we're not only going down to 14K, I think we've got a chance to potentially go down towards this kind of range down here in price, around $10,000. That would give us a really heavy, typical Bitcoin bear market, and I think that at a minimum, that's what we should expect as we go into this kind of environment where Bitcoin has never experienced a 40, 50, 60% decline, really a depressionary bear market in equities, right? And as you all know, we've kind of highlighted that here. We talked about it on our Macro Monday special. You guys can again get access to this through CoinPanel, which is one of our partner tools. It'll show you guys our live updated TA projections here, and we update them usually about kind of once a week, and I'll share if we make any kind of major updates here. But essentially, you guys can track it live when I make these changes before we cover them on the channel. And essentially speaking, right, coming down to that 14K target range, that's the typical, at a minimum, it's actually more conservative than previous bear markets. Usually we have 80% plus, 80 to 90% in traditional, secular bull market, bear markets, or kind of corrections. I like to say that I see them as corrections. I know that it sounds a bit crazy to not see an 80% decline as a bear market, but the reason why I want to focus on this is because we're talking about, in definition, a secular bull market. Bitcoin, in the grand scheme of things, has been in a long-term bull market, right? When we zoom out here, since its inception here, it's never really experienced a 2008 or dot-com bubble. It's only had corrections on an exponential growth pattern here over the past couple of years, really over the last decade. So that's my key point here, right? At a minimum, we should expect it to come down here to $14,000. That's why I think it's actually the optimistic scenario for the bulls. And on the other end of the spectrum, if 14K doesn't hold, we have our other levels here like 12,000 and 10,000, where I think 10,000 is a very likely level where we could see Bitcoin go to, right? And again, it could get worse than that, but I think that 10K is a big even level that a lot of people are going to be watching for, and a lot of people are going to take that opportunity to potentially buy the dip. Now, one thing as well that's really important here, guys, when you're considering investing in crypto and looking for these dip buying opportunities, I know many of you out there are not just looking to buy Bitcoin, you're probably looking to buy a whole range of different altcoins. One of the key things, though, that you really have to be cautious of is making sure that when you guys are going out of your way to buy these positions, it's not just about getting it at the right price. It's also about making sure that you buy it in a safe way, that you're making sure that you don't expose your data, that you don't potentially interact with malicious protocols and expose your funds to high-risk hackers and interceptors within the DeFi space. And that's why I highly recommend, if you guys haven't already, to check out our sponsor for today's video, which is Block Wallet. Now, Block Wallet is one of the most secure and privacy-preserving wallets out there in the market. And to make matters even better, their user experience is second to none. I think it's a really exciting user experience. It's clean, and they have a whole range of features that you just simply can't find in mainstream wallets like MetaMask that focus on consumer convenience. If you come here to the wallet, I'll go ahead, log into my wallet, and I'll go ahead and show a little bit about what Block Wallet has to offer. So as we open up our wallet here, we can see that right now I'm connected to the Ethereum mainnet. I can see the gas fees on the network, and I can go through managing a whole range of settings on my wallet. But one of the really cool things that I like about Block Wallet, especially as we're in a crypto space that has a lot of alternative layer 1 protocols that are utilizing their own networks and therefore have their own decentralized applications and their own altcoins, one of the key things that you should be prepared for is being able to easily connect to these networks and doing it in the proper way. This was one of the biggest friction points that I had when I tried to utilize crypto wallets. Now, what's really cool is that if you go here to the gear icon and click on networks, you can easily add a whole range of different layer 1s and layer 2 networks that allow you to interact with a whole range of different networks. So, for example, I could go here and add Optimism. And just like that, I can add not only the main net, but on top of that, a whole range of different test nets here. Just simply click Optimism, add network, and click Save. And just like that, I've already added the network. And now I can not only utilize my existing wallet across the Ethereum network, but across a whole range of different layer 1s and layer 2s. The same exact seed phrase. And this is where the user experience starts to get really, really clean. Now, cater this, for example, or compare this to what you'd have to do if you utilize MetaMask. You have to go through, look up online, plug in the proper details, the right RPC URL, chain ID, the right symbol. It's all this stuff that just takes too much time. And really, I think Block Wallet takes a really intuitive approach. And to make matters better, they have 0 swap fees in this case on their wallet. So unlike MetaMask, which is going to charge you their own swap fees if you want to do it natively from the wallet, you can do swaps straight from the wallet. So if you guys are interested, check them out at the link down below in the description. Let me know what your thoughts are, and if you guys have a good experience with it. It's one of the best wallets out there that I've found in the market, and that's coming from someone like myself who's actually built a crypto wallet back in the past. So again, I think it speaks a lot of volume here. I really like what they've built, and definitely recommend you guys check them out. Now, outside of that as well, we've also got some important data science that I want to dive into as we delve into this topic to kind of wrap things up. As you guys know, one of my favorite models, the Nuble model, the net unrealized profit or loss, takes on-chain analytics and basically tries to determine from unspent transaction outputs on the Bitcoin network whether or not people are in profit or in loss that is unrealized. And we can see here that we've dipped back into the blue range here. Now, as you guys see throughout history, there's usually a secondary retest here at a minimum in most bear markets into the blue territory that usually moves lower than the previous retest. And we talked about that for the past couple months. This could be our lead into the 14K sell-off. This could be where we really knock the net unrealized profit and loss into heavy loss territory, similar to the two first bear markets here back in 2011 and here in 2015. That's the kind of stuff I would expect to start getting optimistic on price. That's where I would start feeling comfortable, maybe dollar cost averaging a little bit. Again, depends on your risk tolerance here and your time frame. You need to be patient if you're going to be building these positions in a capitulative territory. It might take a long time, not only even if that's the lows to just build a base and move higher, but it also might be that things move lower here, as we've been talking about and emphasizing here on the channel, due to the risk-off nature of the broader economy. And not to mention, another really cool feature of CryptoQuant, which is our data science partner tool that we utilize to pull the net unrealized profit loss data and other types of data science models. They have a really interesting feature for one of the higher paid tiers here on CryptoQuant called the Pro Chart category. And this is where you can make your own, but also you can lean into other different custom-made data science models that the community makes, pulling from different metrics. And they have a really interesting one that I like here that measures essentially the spot volume across all exchanges and whether or not takers, essentially people who are buying, doing market orders, they're getting Bitcoin at the best available price to buy or selling their Bitcoin at the best available price to sell. It measures the taker ratio here between buyers and sellers. And what I think is really cool here is that it has a really good correlation with determining good periods of time to accumulate before breakouts and also periods to start selling and taking profits. We saw that both times here with the highs here for Bitcoin in this past bull market on periods to sell. And we can see here that historically, we've seen when we get up into this range here at 1.02 to 1.04, this is where we start to see a lot of buyers come in. And right now we're sitting around 1.01. So I think we have some more time here. I think we have one final flush at a minimum here. If the bulls are looking for any signs of hope, it's 14K. And seeing whether or not price will be able to hold there. And that chart we talked about earlier, the ratio between Bitcoin and the Nasdaq, is showcasing that even though we're not seeing a lot of optimism resurging in the space, perhaps we've seen the vast majority of the exacerbated capitulation in the market. Back when Celsius, Voyager, all these companies were going, BlockFi, you name it, were going through this huge bankruptcy and restructuring period. And who knows, maybe it's not going to be as bad as we're talking about here on the channel. That's the case I would make for the bulls. And I'm interested what you guys think about this. Do you think that this is something that's realistic? Are you leaning more towards being bullish? Are you already heavily dollar cost averaging? Or are you more like myself? Are you kind of waiting on the sidelines, waiting for a clear trend reversal, and potentially waiting for even lower prices here than some of the targets we mentioned? Anyways, leave a comment down below. If you like this video, drop a like. Consider subscribing if you haven't already. And if you guys like this kind of analysis, you can always check out the Dash report down below in the description. It's a great way to support the channel and get macro insights to what we're thinking about and what actions we're taking in the market. But until the next video, everyone, have a wonderful rest of your day, and I'll see you all in the next one. Take care, everyone.